Hi, this is Kerry Artak with Wicked Stocks, bringing you really an assortment of semiconductor stocks, chip stocks, the big ones. AMD we're going to look at, Micron we're going to look at. You probably already know, if you're watching this video on YouTube, that I put out daily NVIDIA analysis. NVIDIA is down today, and so there's that. And also I'm going to finish with the SOXX, or the iShares Semiconductor ETF. I've got several charts to walk us through. And this is really pertinent information now because I did record this video on Wednesday, April 16th, 2025. And, all the chip stocks are down this morning on news, really that, the U.S. imposed licensing requirements for AI semiconductors sales to China have kicked in. And this is going to reduce, presumably, sales to China. We're already in a bit of a trade war as it is, so this is really nothing new. I'm going to walk us through AMD. Now, these are actually all monthly charts. So this is kind of the mega grand view, if you will. I could certainly break these down into weekly and daily charts as I do the daily NVIDIA analysis on YouTube, as I do in the Triple Q and the SPY as well at wickedstocks.com. And Tesla, let's not forget Tesla. But these are monthly bars. And this bar chart goes back over 30 years, back into January roughly of 91. So 34 years of activity. AMD monthly chart. I could walk us back. There was a significant buy signal that occurred, and it got a little sloppy there for the better part of 3, 4, 5 months when we closed above this horizontal channel structure at 48.30. That is based in part on the January 2000 dot-com bubble high. And then we fell off to the 2008 low. I think that's the lowest the stock had been for over 10, 12 years, maybe even, at least that long. So this is a significant low to use in all of our calculations, and I'll get to that in a moment. But for right now, this is kind of just a simple, basic look at AMD. Monthly chart. It was several months ago that we violated not only the September, that is the August low of 121.82, but also, a channel structure, the violation of which was a disruption of a potential pattern that could play off. Very often, these long-term channel bottoms that is now at 120.66 can contain longer-term selling pressures and then elicit, really, upward rotation on a longer-term basis. Obviously, it wasn't to be. We violated this in February. We collapsed to really just a simple trend line at 79.86. And so, having violated the channel bottom and the August low, we've reached 79.86. I think if you're trading AMD or investing in AMD as we move through the second quarter and into later year, 79.86 is a decent support. It is a trend line that goes back to 2018 against the 22 low. It is a bit of a pivot point longer term. Are we going to test 48.30 in the months ahead? If we were to close the month of April below 79.86, and once again, this isn't a monthly bar for the month of April. If we were to close below 79.86, I'd say chances are pretty good that we'll fall back into the upper 40s, a lower to mid 50s anyway, that 54.57 October 22 low. This area would be in play again if we close the month below 79.86. Until then, the upper 70s are bottom-picking territory, at least as we move into the third quarter. Once again, this is a monthly bar. We could bounce within 3 to 5 months back into the low 120s, but the low 120s, especially this channel bottom, I think is your short sale through the rest of the year. We could fill this expanding wedge out between 79.86 and 120.66 through the rest of the year. But once again, if we close below 79.86, I think the upper 40s are likely. By the end of the year, if that were to occur, the month of April below 79.86, that kind of rounds out AMD. And once again, this is just basic stuff. I'm not getting into Fibonacci here so much, and we'll move on to Micron. Very similar play here. Micron had a much more exaggerated high during the dot-com bubble, and it collapsed to 159 And then we put out the all-time high in June of 157.53. So we did collapse south, broke this low area, 83.54 to 84.12. That was, been there since last September. And simple trend line, 60.01. This may very similar to what we just saw in AMD in the upper 70s, the lower 60s, are decent support for Micron as we move through the second quarter into the third quarter. You could certainly make a case that over the next 3 to 5 months, it's a two-sided framework between 60.01 and 83.54 to 84.12. If we can close back above 84.12, I venture to say we've got a good annual low for Micron. But until then, the emphasis does remain heavy. This consolidation, the violation just this month alone, are we just merely hesitating at 60.01 before we continue south potentially to 31.73? If we were to close the month of April, this is a prominent trend line. I'm not a big trend line analyst unless they're long term. Then you really can't ignore them. And this is long-term. This is a monthly chart. So this low goes back to May of 16, and this low is March of 20. This is that COVID low. And so the trend line off these two significant lows, 60.01 all April, in May, that becomes, where is May? It jumps from April to June for whatever reason. So we'll just leave it alone. If we close the month of April below 60.01, I think continued price erosion within 3 to 5 months. By the end of the year, we could see the significant long-term channel bottom at 31.73. And that is a channel structure that goes back to the 2000 high. So it really is a 25-year structure. And I would expect this to hold through the rest of the year and more than likely through all of 26. This could be a decade-long low here at 31.73 if tested, and I would expect it if we close this month, April, below 60.01. Let's move on to the SOXX. I'll spend a little bit more time on this and kind of flesh out certain line studies that I didn't on the first two because I think this is kind of an industry representation, really. This is the iShares Semiconductor ETF, the SOXX. It is a basket, basically, of semiconductor or chip stocks. So it is an industry view, really. And when I look at a chart like this, first off, the SOXX began after the dot-com bubble in June of 03, and the lowest it's been ever is this 2008 low of 763. The indexes, the S&P 500 index in 2008 put out a 12-year low. In contrast, and I put this out actually recently on YouTube, in contrast, the 1987 crash was just an 18-month low before we continued higher. This was a more substantial low in many respects because it took out 12 years of progress. And then the progress after that was very sort of anemic, if you will. But I'm not going to get into all that. 2008 low, 24 high, those are the extremes. I like speed lines, especially when you get in these sort of pronounced hyperbolic rallies. The channel structures, I'm going to draw one in a moment, but the channel structures are not as significant because they're steeper oftentimes. The line studies, the rising 1/3 speed line that did not come into existence until the 24 high was placed. So though it looks like it's moving through trade here, the speed line did not exist when we were trading in this area. It only came into existence after the 24 high. We hesitated here the month of March. We certainly opened below it, and it looks like we'll close below it the month of April. And with speed line analysis, when you close below a rising 1/3 speed line, that 189.07 is for the month of April, it is the rising 2/3 speed line, 98.49, that becomes the longer term objective. Now, this is not 100%, of course, as nothing is, but I will not ignore this in the months and even the next several years ahead as a possibility that the semiconductor industry will see continued price declines into the upper 90s, perhaps. And that's just an idea that I'm going to keep front center as I continue to look at some of these semiconductor charts. Now, same exact chart. This channel bottom that I mentioned before has a steeper rate. The steeper some of these line studies are, the less reliable they are. But, I mean, after all, this is a 4-year channel. at 174.87. It's also rising on a month-by-month basis. It's worth noting that by the end of the year, these two converge, the long-term speed line and this channel bottom in the mid-190s, 195 and change. And so the takeaway from me here is, assuming we settle the month of April below 174.47 in the SOXX, that this channel bottom and speed line combination can be considered a rising and narrowing range of long-term resistance. Presently, in the mid-170s, upper 180s. They will all converge by the end of the year in the mid-190s. Sellable resistance below which, so we have, excuse me, some long-term pullback points mapped out here. This is once again 2008 to 24. 137.44 is a 50% retracement. That alone is an area to take profits on a short position. And if you're kind of a near-term swing trader, in this case, this is a monthly chart. So near-term could be a 2 to 3 month play, if you will, at 137.44 where you buy it. There's more going on in this area in a moment that I'll show you. We've got the 5/8 at 106.80, and we have this rising 2/3 speed line at 98.49 that will, by the middle of 18 months from now or less, converge with this 106.80 5/8 Fibonacci. So the 5/8 and the 2/3, they will converge over the next year and a half in the lower 100 area, the 106 handle. So once again, it is selling the mid-170s to upper 180s, anticipating the possibility of the low 100s. 106.80 down to 98.49, I think, is the longer-term possibility here with the SOXX. And last chart I'm actually going to show is this trend line. So we've got the 137.44, 50% downside I'd mentioned in the last slide. We do have a trend line off the March 2020 COVID low against this October 22 prominent low. This is a significant trend line on the monthly chart, 134.66. It will by June converge with 137.44. So if you're thinking about kind of the mid-term outlook, that is to say, through the rest of the year, you can buy the mid-130s to upper 130s, 134.66 to 137.44, or at the very least, if you're short, just know that this is an area we can bottom out at on a quarterly basis. This is, after all, a monthly chart. And from here, perhaps round up into what is now 174.47 to 189.07. But in terms of the big picture, I really will take you back to this. This is the 189.07 long-term resistance, below which 98.49 not out of the question over the next year or two, and that is sort of underscored with this channel violation. So it really is selling the mid-170s to upper 180s long-term through the rest of the year and into next, and below which we can continue to decay into the upper 90s to 106 area. I'll go back to this final chart. So if we were to close below this trend line at 134.66 in the coming months, that does set off a secondary sell signal that would then likely yield this longer term possibility in the upper 90s. There's also a trend line here at 94.52 that I actually forgot to mention. So this entire area is converging over the next year and a half with 106.80. It is an upper 90s, low 100s long-term support, and dare I say targeted long-term support that could, over the next year or two, this is the monthly chart, play out. And 134.66 to 137.44 is kind of an intermediate pivot point that I would call mid to longer term pivot point in all that. Is there anything else to say beyond what I already have? I'm hitting, 13 minutes. I don't know if I still have your attention or not. Oh yeah, last thing I will say. And there is obviously the very real possibility that we could spring back for whatever reason. And if we were to close the month of April back above 189.07, and in May 190 even, if we were to close back above all this, I see a good low for the year, and then likely recovery at least for the next 3 to 5 months. I don't know back to that July high by the end of the year, and I'm not really going to go into all those specifics, but I just want to say that if we can push back above this area, then I'm no longer expecting the upper 90s. And the same is true here with AMD. If we can push back above the low 120s in the coming months, and once again, this is kind of a 79, 86, upper 70s support to low 120s resistance I mentioned. This area, if settled above, would tell me the move low is in, and we can expect higher trade into later year. And the same is obviously true with respect to Micron. As it tests this long-term trend line, we can spring back into the 83, 84 handles. And if we can close back above 84.12, after all this, I would say we've got a good low for the year, and the stock can continue higher. So there we go. Almost 15 minutes. I'm going to leave it at that. Thanks for watching. Check out wickedstocks.com, where you can take advantage of a 5-day free trial on daily Triple Q, daily SPY analysis, weekly Apple stock analysis, and of course here on YouTube, we put out daily NVIDIA and Tesla analysis. You have a great day.